Hey everyone, it's Niall at Learn to Trade the Market, bringing you another trading setups video. Okay, we're approaching 1,500 members on the free list. Sorry I haven't been active on the videos lately. There's been so much excitement in these markets. I've been busy trading, among other things. Tonight I just want to bring your attention a really giant setup on the British pound. I'm already short. I think there's still time. I think this market's going to move down to 177 again at some point. Alright, I'm just going to run you through the trade setup and explain to you why I liked it and how I went about things. Alright, so as you all know, I like to trade price action. Alright, so the first thing we can see on this chart, we've moved from left to right up for about 4 days. We've formed two inside bars. I'll just point them out right there. You can see they're very clear. They're inside this giant yellow or green candle, upward candle, then two inside bars. Right, so then we've had a nice false breakout. On the daily, it just has to touch those highs, break through those highs, and then fail or reject back. Now this works both ways, of course, so we can obviously have a long setup or a short setup. This is obviously a short setup for me. Initially, I just want to actually be honest here. I shorted well before the daily candle had completed. Now, I want to show you guys how I went about that. It's really beside the point of how I got in on the intraday chart for novice traders. Like, I just advise most novice traders to trade purely off the daily chart. This is more of an advanced way to look at it. All it really is false breaks. Now, what a market will do quite often is form a consolidation, and then actually it'll plateau out for a few days to a week, and then it'll try and break. And if it breaks one way, you're going to get traders take that side of the market. They will enter positions with that breakout. Now, once they get screwed over, which is probably 70% of the time, the market has to take their stops and really squeeze their positions. So what's happened in this instance is they've tried to break it higher, which is that little pop there, and you'll see again the market moving down through the lows of the inside bars. So they're the inside bars. Once the market broke those lows after breaking out there, you can see we failed, and we're now continuing lower into the next day. So to just recap that, what we're really looking for is a horizontal level that is formed, and you can see there's been one high, two high, three highs, all around the same level. Now, to make that simpler, I'm going to put on a intraday chart. So that's the 240-minute chart. Let's just see if I can get that up. Alright, so what we're doing, we're just now going down in time frame to a 4-hour chart, and what we'll see is a little congestion zone on the chart, and I'll just bring that up. So if we have a look at the highs and lows right here, you can see that's obviously a level that's relevant in the market, and then we actually try to break out, and a classic intraday signal is a false breakout of a key level of the recent price data. You can see there's three yellow candles here, and then we had the nice pin bar that formed, and then another little red candle. So really what it was a false move up, and then a very quick snapback, and then look at this big red candle that formed. I mean, that was just obvious. It tried to break out, it failed, and then it's just reversed. This happens over and over in the Forex markets. You can see the new day opened, and it's now just falling off a cliff again. I mean, this is how professionals trade. You wait and wait, and I've waited a good week for a setup. You see these inside bars, they signal something's about to happen, whether it's a continuation or a Fakey setup, which is the false break. So your Fakey happened intraday there. The false break happened intraday there, which created the Fakey signal on the daily. So an astute trader might be watching the 240-minute chart and see this false break and take a short either at market or waiting for a break of the previous session's lows. I mean, there's a few ways you can do it. What I really need you guys to understand is that it's just the market doing its thing, and it will do it over and over. It'll false break. It's a failure of everyone else's positions, and now the market is heavily short. So obviously their stops are going to be up here. They're going to be shorting the market down here and have their stop losses up here. Hopefully they won't push this back up before pushing it down. I'm looking for 180. Surprisingly, 180 was down here around these previous lows, and that's a way to define a target, find the most recent piece of data that acted as support and or resistance, and target those levels. So there we have it. There's a false break on the 240-minute chart, and then taking it back to the daily, it resulted in a massive false break. We had the inside bars. Only has to be one inside bar, and tried to break out, failed, also formed a massive pin bar in the process, and now look at it, it's just coming off again. Now I'm just going to bring to your attention one that happened a little while ago, a couple of weeks back. I'm just going to point out two inside bars on the daily. This was against the trend, so I didn't really take it. It's just an example of what happens. You can see there's one inside bar, two inside bar, and then we did a false breakout right there, tried to break lower, and then bang, rallied up. That was a pin bar low as well. So it was a pin bar off previous support and a Fakey. Look at what happened the next day. I'm onto something big here. I suggest you all start to learn false breaks and pin bars. Price action is king. There is nothing else you need to learn in the market except reading a chart. And I urge you all to look through all the videos, look through the forum, send me emails, talk to me on the forum, ask me questions, really get involved in this, because this is what works in the market. And I'm about to show you my account, which shows that I'm currently short the British pound and up over $7,500. Alright, you can see here I'm up $8,180 or $8,166 now. That's Australian dollars. I've been riding this for the last couple of days. I initially entered partial position before the Fakey, and it was because the 50-day EMA was touched in the direction of the trend, so I was looking to just join the trend there at a logical resistance level around the 185.50 mark, and then I waited for that Fakey to occur. You know, those inside bars were a solid indication. Once it happened, I shorted more, and now I'm reaping the benefits of taking two short positions. And you can see that $8,200 or more. Probably looking to cover there the limit 182.10s where I'm looking for the market to go. It's probably going to go lower. I've obviously got some money management in there to get me out if things start to go back up. Alright, so complete transparency there. I'm just trying to get you guys confident in these setups, and I put my money where my mouth is. I'm showing I'm actually trading here. These setups work. I can't guarantee they're going to work for you, but I'm hoping that you will learn a similar method to take into your trading. Alright, I'm going to talk to you guys on Monday with another very big surprise, and I look forward to talking to you then. Have a safe weekend.